Our first guest then, Ajay Bodke, Head of Investment Strategy and Advisory at Prabhudas Lilladher, now joins in. Ajay, hi, good morning, good to see you. What's the call now on the market? Do you think we've had a peak for the market, or would you still have, or would you still believe that a pre-budget rally could be on the cards?
I think the market is showing signs of consolidation after a very sharp rise from 6,200 to 7,700 that we had seen briefly last week. In my opinion, I think the trajectory for the market till such time that the budget is presented in the first week of July should continue to be on the positive side, albeit I think the ferocity with which we have seen the rise clearly seems to have abated, and the market is taking a very measured kind of call in terms of further rise. The market is trading currently at 15.7 times one-year forward earnings of 479 rupees on Nifty. And if you look at last 10 years average, it is 14.8 times. So already we are getting at around, say, a 6% premium last 10 years average of one-year forward Nifty. The other valuation metric I look at is MSCI India's premium to MSCI Emerging Asia ex-Japan. And vis-a-vis last 10 years average of 24%, we are trading at around 27%. Are we very close? We are nowhere close to excessive valuations. At the same time, as I said, I think we need to digest the rise that one has seen. And what is supportive, as you just mentioned in the preface, Ekta mentioned, there are 4 or 5 very strong macro points which are acting as tailwinds. We are at a 13-month high insofar as IIP is concerned at 3.4%. We are at a 7-month high insofar as exports are concerned in May, growing at 12.4% to $28 billion. We are at a 3-month high insofar as, 3-month low rather, insofar as the inflation is concerned at 8.24%. And we have seen the vehicle sales for the month of May rising at 2.76%. Capital goods in particular has had a very strong one, growing at 7%, although concerns still remain on the consumption cycle, with both durable and non-durable goods showing a deceleration in the month of May. So I think the macros are supportive. The biggest overhang, as you mentioned, remains what happens if the crude flares up. 80% of our requirements are imported. And we all are very positive looking forward to the under recoveries coming off progressively, with diesel under recovery 2.8 rupees. The rupee's strength has also been supportive, with roughly $8.5 billion of FI flows coming in equities, 5 billion in debt. So I think the two overhangs in the markets, as I clearly see the medium term, is what happens if there is a flare-up in the crude prices and its impact on risk aversion globally, also impacting India. And secondly, obviously, is the El Nino and what kind of impact would a failure of monsoon happen. But there again, I think the market divided. People think only in the tail end get impacted. The drainages are full of cereals, and the government obviously is cognizant that it needs control inflation and has put a control plan in place. So overall, I think we need not be excessively worried, but at the same time, always pays to be cautious, and as the market rises, reorient your portfolio in case of names which are fundamentally strong, free cash flow positives, and growing earnings growth.
Okay. Ajay, hi. Good to see you in this morning. What about BHEL? I'm going to ask you about that stock in specific. It hasn't participated as much in the past couple of weeks, despite the fact that it's up 40% YTD. How would you approach it?
I think in capital goods, as I said, as we already seen quite a few stocks, I think more than doubling, or some of them even giving higher returns than that since the start of the rally. So I think in all the cyclicals, as we scale new highs progressively, I would be toning down my positions in those stocks where the rise has primarily been led, as Anuj put it, on hope and fundamentally not being as supportive. And I would try to reorient my weights in case of those scripts in those high beta sectors towards stocks which, as I mentioned, are fundamentally supportive in terms of free cash flow positive, in terms of ROEs trending up, earnings looking up. So I would start looking at companies like Hermax, Crompton Greaves and Larsen in the pack in capital goods at the current juncture for a medium term perspective, and be not as positive on BHEL.
Ajay, BPCL has corrected about 8% on the concerns of crude for last 2 or 3 days. Is it a good entry point, or would you wait for a bit more correction? And even for ONGC?
Yeah, I think I missed the name, the first name that you mentioned, Anuj.
BPCL.
What name?
BPCL, Bharat Petroleum.
Yeah. I think, here again, Anuj, the hope the market was really looking forward to in the oil and gas sector, two decisions. One is, when is the government going to announce the doubling of the gas prices? It was expected sometime in July, but now let's wait and see what outcome happens. And the second, obviously, as appreciating rupee had led to a massive reduction in the under-recoveries of diesel. The hope was that, I think, Erla Petrol, I think the government would sort of, go ahead and announce the complete decontrol of diesel, and also a certain timeline in terms of progressively reducing the under-recoveries on LPG, certainly not on kerosene. So that sort of roadmap is what the market was expecting will bring clarity to downstream companies like BPCL, HPCL, and hence the rally one had seen. But I think, the flare-up in crude currently sort of, is again bringing back concerns. And in case the under-recoveries were to go up, will the government sort of quicken the pace of that 50 paise per month increases in diesel prices, or will it hold back? So I think that has injected a sense of uncertainty in some of these names, and I would rather stay away till some clarity emerges on these issues, both on the global issues as well as some of the local issues in terms of the policy that the government wants to enunciate in the medium term.
Okay. Ajay, how would you approach a lot of these hope stories, since that's what we are talking about within the broader market? Say something like a fertilizer, which has run up quite significantly, infrastructure, which still is plagued with debt problems at current reckoning. Would you then be cautious on these stocks, or would you, accumulate a little bit on the hope that maybe there will be that fundamental strengthening which will come in the latter half of the year?
I think the broader call that we have on equities is that it is a buy on declines market. We are looking at a multi-year bull run. And I won't be too surprised, I think, if we are in a different orbit, in say 18 to 24 months insofar as equities is concerned. I think after remaining on the sidelines, a large amount of institutional investors on the domestic side as well as the retail investors are for the first time getting enthused. Because unlike 12 and 13, when we had roughly $20–25 billion each year of net FI inflows, we had seen net redemptions on the domestic side, and retail investors were watching everything on sidelines. So I think this whole turnaround in sentiment is aiding a lot of flows coming in on both the domestic investors side, institutional investors side, and retail side. So I would still be expecting it to be a buy on declines market. And hence, the names that you mentioned on asset owners, I'll be looking at those companies which have concrete plans of monetizing their assets, repairing their balance sheets, and making banks confident that, with the monetization of assets, we can further lend to these companies for newer projects that they bid for. And hence, I think I would be buyers on some of these companies, but only on declines.
Okay. Apart from Thermex and Crompton, any other names in the broader market that you like, Ajay, if you would like to give us some names?
Yes, certainly, Anuj. I think, in the banking sector, I would be looking at it from a two-halves perspective. One is, we've seen in case of SBI and some of the other large banks, that their fresh slippages are clearly, in the last quarter, were lower than the upgrades that one has seen. And hence, that trend, in my opinion, if the economy improves, will strengthen. And hence, on the PSU banking space, those banks are trading at a very steep discount to book. I think there would be a case for a slight higher discounting out there. And I see some legs, for some of the PSU banks like an SBI or a Union Bank, or even for that matter, an Andhra Bank. On the private sector side, I think, as the consumption story picks up in the medium term, we should continue to look at banks like HDFC Bank, Axis Bank, and ICICI Bank. So these would be our top picks. In case of autos, I think Motherson Sumi and Maruti would be our top picks. Motherson especially, extremely strong order book position in Europe, 4 billion worth of orders they'll start implementing. And I think that is one stock I would be advocating looking at the medium term basis. In case of capital goods, we already spoken. In case of cement, I think the South-based cement companies, I have been advocating for the last 2.5–3 months now because of, creation of 2 new states and the agitational politics holding back the growth in case of infra build-up in both Telangana region and Simandra region. So there I think, a company like the Ramco Cements, and overall on an India basis, a company like ACC is what we are advocating investors to look at. In case of pharma and IT, the fundamentals in America and Europe was hope that the volume and pricing will be on a positive side for Indian companies, but they're ranged against this headwind of a rising rupee. So there I'll be very cautious, I'll be underweight there, but look at companies like Tech Mahindra and Dr. Reddy's from a fundamental perspective in these sectors.
Okay, fair enough, Ajay. Lots of picks coming in there. For example, Thermax, Motherson Sumi, cement space is ACC as well as Ramco Cement. Thank you very much for joining in and giving us all that perspective and all of the stock picks.